when we realized that the drivers of financial inclusion have so dramatically changed, especially with a whole revolution around delivery channel, often through partnership between financial service provider and non-financial provider, as well as a revolution around technology. I think this is a very timely book. I think it really helps us to take a very different look and approach on financial inclusion. I mean, what Joanna referred to as the holistic approach, and try to understand the market development forces that can shape financial inclusion. So that would be my first comment. I think it's really the right book at the right time. Things are evolving so fast that I think we needed to have that book now to really help us to navigate these largely uncharted territories. The second comment I wanted to share is that it is very forcibly putting back clients at the center. And what I noticed is this morning, in this morning presentation, we spent the most time in your presentation, Johanna, to talk about clients. And we heard the video by Rich Rosenberg. And I think it's very powerful to see how the book is really reflecting the perspective from the client through the financial diaries, through the understanding of the demand, and see how we can make financial inclusion work for those people through better alternative through the formal financial sector. I think it's very powerful to link this understanding of the client financial lives and their variety of needs and constraints, and trying from that basis to see what kind of solution can be found through the range of more formal options which can help improve the management of their financial life. I mean, at the end of the day, it's all about what's going to work for Nelson. And I think that's a very powerful message from the book, which is compelling us to really take that lens in whatever we do. And the third comment I wanted to share is from a donor perspective. If we look at what we are doing as UNCDF, I find this new handbook extremely useful because it gave us a very concrete guidance about, first, the lens of who are in the market and who are outside. And if you are outside, or largely outside, what catalytic role can you play to help basically this market development approach work better for the poor. And we will come back on the session around donors this afternoon in more details, but I find the book extremely useful in laying out a very concrete framework about the options of what can donors do in this very rapidly changing context where you have more and more players and funders who come in that space. So these are the three initial comments I took myself, reading through the book, and I will stop there.
Thank you. Well, we'll have a chance to come back with questions. Kate?
Yes. I'm going to wait. There we go. I'm also very happy to be here and to be a part of this first panel discussion. I will also make just a few very brief comments. So we've heard about the evolution of the approach to providing financial services to the poor, starting with a credit-led approach, version 1.0, then institutional approach 2.0, and then the demand side 3.0. And the focus of regulatory work, which you can have regulations that are enabling of a market. You can also have regulations that impinge on a market. There are a wide variety of regulatory issues that are touched on when you're providing financial services, as we'll discuss in a later session. But the changes from version 1 to 2 to 3 have also been accompanied by similar kind of changes in focus on regulation. So in the 80s, or the 70s and the 80s and into the 90s, there was a lot of work being done on what are NGOs allowed to do? Are they allowed to engage in lending? Can they, what are their tax situation? There was a lot of focus on these very discrete issues of what is permitted and by whom. And then as commercialization started in the late 80s, 90s, there was a lot of discussion on how does an NGO transform? How does it transfer its assets to a company? What happens to the NGO after it's transformed? And what kind of institutions can focus their effort and perhaps be entitled to specific and special regulatory treatment if they are serving primarily the poor, making small loans and taking deposits? So there was a big effort to try to create new institutional structures, institutional forms in different countries, and one country would follow another. The approach now is much more holistic, and it really is, it's laid out in the book, and it's aligned very much with the book, and I think people are understanding that it's not, that there aren't just these discrete things that have to be addressed that are basically focused on who the institutions are. Instead, there's a whole range of legal and regulatory issues and informal rules that impact who can provide services to whom, and how are the consumers, poor consumers, protected? How are they ensured that they do have access? So that will be what we'll be discussing at more length in the regulatory section, but this is something that the book covers quite clearly.
Thank you. Ruth?
Thank you, Tom. I had the privilege of reading the entire book, and it was really a privilege. And I've also had the privilege and opportunity to work in the core area where demand and supply meet around products and services for customers for a whole many years and a good part of my professional life. And so it was very interesting in reading the book and putting my work personally and also the evolution of the field into that broader perspective. I think in what we heard this morning, hearing about what customers' needs really are around asset building, around risk management, and around consumption smoothing is really helpful. But the challenge then that I'm left with in the book then really, or from the book, is thinking about what it's going to take to really be effective at bringing products and services that actually meet demand. So how are we going to blend customer understanding and insights? How are we going to support and build the capacity of the numerous financial service providers that are out there? How are we going to support all of the partnerships and the strategic alliances that need to happen? And I think Bob referred to it in his opening address. The need around building the human capacity of customers, clients that we're going to talk about and hear about demand is important, but also building the capacity of the people providing the services. A very wise donor reminded me many years ago when I was in operation in Tanzania, I think Gerard is here from CETA today, that this takes time. And so while some of these concepts are easy perhaps to explain, it is a huge challenge to do it right. It takes a lot of thought, it takes deliberate disciplines around going carefully, around managing growth. It takes a lot of energy to offer financial services responsibly, which is also a huge part of this piece. So it was a pleasure to see that evolution and movement to version 3.0 that the book really is well placed to do. I think the other big piece and takeaway for me from the book was it was no longer about the experiment that worked. You know, can and does a poor person repay a loan? Can an organization sustainably make money doing this, or to even cover its costs and then reinvest? The question really now is, you know, all the old ideas basically are put in proper perspective, saying there's a whole range of products and services that are out there that people need. So that was my big observation on the book.
Thank you. Extremely interesting, and certainly issues to be drawn out. I am curious to ask the panelists whether or not what the book brings forward would change your attitudes as donors and supporters in any way. Is there anything, I mean, we can talk about a lot of things about the focus on market, but what, in terms of the instruments and the perspectives that donors bring to bear, would change because of this?
Mm-hmm.
Okay. So I can start to answer this one. You know, it's interesting that we have been using the word facilitation, facilitator, for quite a few years at CDF, and not always exactly being clear of what we meant. So we had an idea, but I think what I found really interesting in the book is that it just creates a very clear framework, based on this market development paradigm of what facilitation means. And also, what struck me is the analysis made that despite the much broader range of issues that we need to address in market development, donor funding has remained very skewed towards refinancing providers, 86%. Now, in the countries where we work, a lot of them LDCs, post-conflict setting, I think there is an argument to say that even a donor can support the growth of providers, and we are doing that through a range of programs, because you need to kind of give an impulsion to the market. But I think what the book brings is a very clear perspective of be very sensitive of your additionality, whether you are crowding out other investors, and where you have the maximum impact and leverage. So I think for us, if I look at CDF perspective, it really kind of further clarifies some of the choices that I think we have made in the past, but I think it gives a very solid framework on which to continue to assess whether we're doing the right thing or not. Yeah. So that's what I would say for us.
Ruth?
Yeah, I would add to that. I think it also calls for donors to be really thoughtful and careful around coordination, to understand what others are doing in this space so that it is indeed adding and contributing to the entire ecosystem and not distorting any part of it. I think there's also ongoing work around use of best practices and adherence to market principles and being sensitive to what your interventions might need. And of course, there's huge needs in that whole enabling and supporting role that donors can still play, but always very careful and deliberate understanding of the specific context that you're working in and what that specific context is like.
All right. Speaking of specific contexts and regulations, I think we're all aware there's been some serious backlash in some parts of the world with respect to the issue of over-indebtedness or whatever name it goes by in particular settings. Certainly we've encountered it in India and Kyrgyzstan, to some extent in Pakistan. Kate, is this a trend that we're going to have to contend with, or are there steps that can be taken to both deal with the backlash but also look at how we as donors or operators in the field can improve our practice?
Mm-hmm. So the financial crisis has definitely led to a focus on the need for strong consumer protection regulation, whether it's in developing countries or developed countries. We now have a new consumer protection agency in the United States, and this focus on providers, what their role is vis-a-vis the customer, I think is becoming, people realize how critical it is. And financial inclusion, it's not a positive in somebody's life if it's not inclusion and services that are provided that benefit the person. So if you end up becoming indebted because you are persuaded to take on a loan or because you're not well enough informed about the obligations under that loan, then you're not going to end up in a better position. So I think there's a big effort on part of the SMART campaign, individual countries, FincoNet, there to try to get providers to comply with formal and informal standards. So that's something that donors are working with, also doing a lot of financial literacy and financial education on the consumer side so they can better understand what are the products that they are getting. And there are also some examples of countries that have actually imposed very strong requirements on financial service providers so that they cannot make loans that would result in the customers being over-indebted.
I have one last question for all three of you, and then I'd like to open the floor for questions, and that is, Joanna placed quite a bit of stress on the importance of the informal element in that pyramid, and I'd like each of you from your own perspectives to comment or to critique that suggestion about the role of the informal provision here and its significance to the field, but also to all of us as practitioners. Fire away.
Okay. I think the informal sector is a really important part of people's lives today, and poor people's lives in particular, but as Joanna pointed out, even in her own life and in my own life. And there are some problems with having an informal sector, and those problems have to do with anti-money laundering and combating financing of terrorism. How do you comply with certain rules that are being imposed by governments if you're an informal provider? But aside from that issue, I think that the ideal situation is for a poor person to have a choice between formal and informal products and services. And pushing everybody in one direction, it could end up being, placing certain people in a worse situation than they are today.
I think there is much to be learned, and I think it's great that the book is putting so much emphasis on how to really see what's happening in the informal sector, and now we have much stronger basis to do that with the portfolio of the poor and other research in different ways. I mean, first to recognize that it's part of the financial life of the poor in very large scale. Self-help groups in India have dwarfed any other form of financial access for the majority of poor people. It often have the characteristic in terms of convenience, speed. I mean, it may have some unsafe aspect of it, but there are some certain characteristics in terms of access, design, flexibility, which should inform the way we think about the equivalent of the formal system. Right. I think it can play a very important role in terms of access to the MICE line, to the last mile in enabling, financial inclusion. And maybe there is a way that you can make certain aspects of them more safe by linking them to, formal savings account or things like that. So I think there is a whole nexus of challenge and possibilities that we should explore to learn from it in designing equivalence services in the formal financial sector, which could have added advantage, to continue to acknowledge the role in terms of access as a last mile for those people, and to basically see how some of the kind of revolution around technology and delivery channel can really build on what exists at that level. I think what struck me is usually the system continue to coexist with formal access when both exist. So I think we need to recognize that as well. Mm-hmm. At the end of the day, is from the client perspective, how can we provide more options while really building on those systems and acknowledging their existence?
Ruth?
Yeah, I don't have much more to add, but to echo what you just said, Henri.
We're not using the word echo. That was this morning. Sorry.
Very nice. I hope we're all awake here. So it really is about a good way to offer services to that last mile, to individuals who are not yet, in proximity because of remoteness, sparse populations, and other types of reach. So I think there is a role to play, for the informal sector there. I think there's also some interesting things to be learned, and people have talked generally, what can we learn? But one of the studies that came out of the Financial Sector Deepening Trust in Kenya was that a large number of people who were working or were part of informal savings groups continued with those groups even after they participate and get access to a bank account. So we need to recognize that many times these informal systems are part of the social fabric of communities. And people choose, and I like that word as well, people choose to remain with them for very different reasons. There's a huge amount of social capital that can be built up there. There are risks, yes, there are questions. We're also learning a lot more about the self-replication of these groups, about how these groups continue long after any kind of facilitated activity. So I think the issue here is that there is a role, but it's not maybe simply about financial access. There's other reasons.
No, I think that's a very good observation, and one sees a number of cases where the combinations of incentives or dimensions of this activity play into each other in a very real way. In reading the portfolio of the poor, the finding that struck me the most was the fact that formal microfinance was not the first choice in case of need, and we mentioned the variety of different sources that people turned to it. It's not that it was seen as something that was less desirable, but it was less accessible and less flexible, I think, in many of those cases. Well, enough from me. Some questions from the floor, please. Yes.
One of the areas that the book did not cover, I think, in depth was around downscaling banks, which for some period of time was thought to be one area of work that we could help support and promote to reach, work with banks, to Bob's point earlier, work with banks to help them, move along the continuum and serve a broader range of clients. What's your view on whether or not that still remains an opportunity, and is that something the book could have perhaps looked at more carefully?
Anybody hear enough of that to answer it?
The role of commercial banks in continuing that, downscaling.
No, I think we have.
I think that remains very relevant because I think there is a whole new range of options of partnership between banks and the range of retail agents to increase access. So I think, bearing in mind what Bob was saying in terms of the kind of cost structure and the human resources kind of constraints on the bank level, I think now with the kind of potential of technology, MNOs, or the range of kind of agent network that we see emerging, I think it's going to change the options for banks to look at downscaling on a massive scale, because I think we have much more options. So I think their role will continue to be there, and I think what they offer is, the ability to provide safe, regulated savings accounts, and I think that's a tremendous asset. If you can link that up with retail agents of different natures, which could help to access the last mile, I think that could be a very interesting proposition for commercial banks.
There's also an effort right now on the global standard setting level to try to develop guidance for bank supervision that will reflect the different risks of different products and services. And one of the things that's been acknowledged is that there are different risks involved, and sometimes they're much less, but there are different risks involved when you're serving poor people, when you're making small loans, when you're taking small deposits, and you're dealing with small transactions. And so the Basel Committee on Banking Supervision, which sets the standards for bank supervisors, has come out with guidance on how do you apply the principles for banking supervision to commercial banks that are involved in micro-lending. And it's also come out with new core principles that explicitly acknowledge that any supervision, regulation and supervision of banks should be proportionate, so that the costs of the regulation to the regulator as well as to the banks is proportionate with the risks that are being addressed. So I think that effort, I think it's very encouraging to see at a global level that there is an acknowledgement that the way the system is structured right now, at least on a regulatory basis, is mostly aimed at the consumers who are being served today and not those who are excluded. And one way to bring them in is to start adjusting standards to make it easier for banks to actually do that, to have an adjusted provisioning requirement or capital requirement or something.
I also can't help but wonder whether it's going to be a matter of market maturity and demonstrations in the market that will help banks to downscale. If you look at some of the examples in East Africa, there are now some very strong commercial microfinance banks who serve a very poor segment, and they've actually challenged some of the traditional banks that serve the top tier only. And so I think that demonstration effect in the market and that competitive effect then in the market is going to possibly be what forces banks to downscale. In terms of incentivizing them to downscale, I don't see that happening anytime soon. And if those of you who are Canadians in this group, if you've studied Canadian banking history, you'll see between the 50s and the 60s and 70s how the commercial banks in this country had to go down market and what enabled that, and it was a factor of competition and also technology, I believe, if you really dig deep. So I think those factors may also be part of this.
Yeah, very helpful. Yes.
Hi, I'm Schaefer Baumstein with the Aga Khan Foundation USA. And I was interested in the discussion around financial education and literacy. And Ruth, specifically, maybe with your experience, as you had mentioned that, kind of institutionalizing and making financial literacy and education sustainable, and where that should really sit and who should be providing that. So if you could speak to that, and if anybody else, of course, has comments as well. Thanks.
So, yeah, happy to answer that. You know, what is the role of financial education, which is a non-financial service with this whole package, and where should it really sit? I don't think there is an answer to that. There is probably a debate that is there as strong as ever. Can a financial institution whose core business is lending money and putting money in deposits, is this something that they, through their CSR department, can fund? Should it be part of them, for them to fund? Many of them, or many of the microfinance institutions, did realize, and in my own operational experience, customers who had access to that financial education tended to be much better customers on the product side. There is a debate out there around the business case for financial education. You know, is this a public good that will need ongoing investment by governments or by donors? So I think there's probably more questions than there's answers, but they're very, very good. And I think the recent financial crisis has elevated the question and the challenges around making sure that you have not just access to financial service, but that you have capacity. You have capable customers who know how to make informed decisions.
Janet, did you have something to add?
I think that's great.
One more question? Yes. This is an insider question, I can see.
Semi-insider. Hi, my name is Peter McConaughey. I work for the World Bank, and I worked quite a bit on the handbook. My question is surrounding providers and the diversity of providers. I think one of the central recognitions of the book is that there are multiple providers in the market for financial services. And I see a lot of donors still highly focused on MFIs specifically. I think one of the interesting issues that the book posits is whether the actual operational structure of an MFI makes it very difficult to reach the poor because they are often focused on sustainability, and that inherently self-selects a number of clients. So I was wondering if, as you know, as MCF or as UNCDF, and just more generally, whether there is priority from donors to really focus on other providers who are not MFIs, who might really be reaching different areas of the market not served by MFIs.
So I'll take a start at that. Did everybody hear the question? It's really about the providers, and if it's not going to be through MFIs, who else might it be? You know, if you look at that parts 2 and 3 of the book, huge section on the range of services that are out there. I think for the most part, we don't know about a lot of the other providers yet. This is early days. We're evolving into that stage 3. And I think the discussion that'll follow shortly around technology takes us along one of those possibilities. I think there's primarily a lot we don't know. And so therein the challenge around capacity to deliver responsible services to informed customers.
Henry?
I would just add, I think there has been an example of MFI pretty good at poverty outreach on their traditional client base. So you have efficient models to deliver small-scale financial services to poor people. I think where the question changed by fundamentally is when you talk about the Nelson case, somebody who just wants to deposit $1 a day. And this is where we are reaching the limits of what an MFI can do. And I think this is where I think the book is very inspiring and interesting, because it opens up the debate about a wider range of providers, the role of partnership between different types of providers, and the emergence of new enablers, including technology. So I think this is from that broader kind of perspective that we are likely to see some answers coming out. And I agree that this is for that type of clientele. Then, of course, the MFI model may not be the right answer. You need a different approach. But I think the book is opening up our mind to think of those models. Again, I think it's very interesting to come back to this Nelson case, because that's really the compass for us to really find the right solutions.
I think also just one quick point about which services and products we're talking about, and we're not just talking about loans and savings. So insurance in most countries has to be offered by a regulated insurer, and this is the position of the global standard setting body, that everybody should be formalized, and the sale, the brokering of products and services by a non-insurer is okay, but not the underwriting of the product itself. And when you get into payments and transfers, you also have issues of what is the role of an MFI, and there have been some cases where there are models that work, but it's so we're not just when we look broader than credit and limited savings, you have to look broader than the MFIs.
Well, thank you. Please join me in thanking our panelists. Thank you very much.